Hey everyone, let's continue with our next slide where we explain our last strategies that we are giving you on the resource. So go and check out on the resource. Will provide you with all of these strategy. So we are done with these two strategies, simple time simple strategy and RSI simple strategy. So now we are going to BB, what we call Bollinger Band mean reverting strategy. Simple, that's the one that we are going for. This one I just stick with red so that you understand what we are doing. So if I click here, it gives me an option for downloading. There's no need, as I said. Let's get straight into it. So this is our Bollinger Band mean reverting strategy. So BB mean reverting simple strategy that was created in 29 here at UNICOASTER Trading Group. It's a mean reverting strategy. We are just using Bollinger Bands, right? So you should decide whether to go long or short on a certain time frame, right? Where it works perfectly, go and see where a strategy that works perfectly. So remember that prices of pairs with similar economies, right, tends to move in a range. Lastly, hence taken upper and lower bands to be dynamic and supports. So I've explained which pair. Usually it's a USD card. So I usually use this on USD card because they have similar economies, right? So what are the trading strategy steps, the setups, right? Trading setup. So trade on 4 hour. I usually trade on 4 hour, 1 hour chart when I'm doing day trading, right? Select a time frame you should trade. I usually like 1 hour on USD card. So Bollinger Band should work or would work for mean reversion, as price tends to bounce between these two similar pairs, these two economies. So they form what we call dynamic supports and resistance levels, right? They change. So simply the upper and lower band, as I explained, they are dynamic. So this is applied in a ranging market conditions where do you say, as I explained, it's USD card, right? It's a ranging market. It usually ranges most of the time. So to filter out potential Bollinger squeezes, right, or my breakouts, those breakout signals, so you should add RSI. So I've explained about RSI previously on the last slide. So you add, so here generally with this strategy we are using a Bollinger Band and RSI in conjunction. So there are two indicators in general, right? So I'll just write here. So this strategy is using an RSI plus Bollinger Band BB. That's what we are using. So this is used for filtering if there are breakouts or what, right? So that's what we are explaining here. So let's continue. So make a tactical decisions on how to enter and exit. So for every strategy you should have tactical decision on your entries and exit position. So risk should be 2%, as I said, for this strategy always. So trading rules, what are the trading rules? So entry rules, what are the entry rules first? So enter when you are going long. If so, generally our simple strategies like this. So this is what we call our RSI. This is our Bollinger Band, right? This is our Bollinger Band. So how do we enter? So you enter if when you want to go long. You should be very careful. Here we explain you should be very careful here. So if the signal candlestick low is less than or equal, is very important, less than or equal to the bottom Bollinger Band, you are going long. If the signal low is less than or equal to the bottom Bollinger Band. So as I said here, let's take for example, right? You see this is our low, this is the low, right? So we are saying you should, so if you see the low is greater, it's below, sorry, it's greater or less, it's equal or less, right? It's equal or less. So this low, as you can see, this low should be lower or equal we know the low of a candlestick. So this is a red candlestick, right? It shows that the low is below here. So we are saying if the low of a candlestick is below the bottom band, right, the lower band, it can be low or equal. That's the first condition to see if there's a signal. So you should know, right? So what else? So it should be less than or equal. So the low should be less than or equal, as I explained here. Should be, this is less than or equal. So sometimes your low can be equal to this lower band. This is our lower band, this is our upper, this is our middle. I have explained. So it should be less than or equal to, we are trying to find an opportunity to go long. So, and the signal candlestick close is above the bottom Bollinger Band. So it should be the lower band, right? So we are saying the low should be less or equal to this, right? But another condition, so I have managed to explain one condition. The second one is your close. So your close for this red candlestick is this one, right? Can we see? This is your close. Your open price, sorry, your open price for this is a red candlestick. Your open price is here, which means if it's red, which means your close is here. But can you see your close is above this lower band? So the first signal, the low of or shadow, this low of a red candlestick is below, or is below. That's the first thing. So it should be below or equal to this. The second one, the close of this red candlestick is above the low. That's the second. The last one, so we have three. The last condition is your RSI. Your RSI should be also below 30. So you should wait. We now have three signals that you can see. The first is your low should be below or equal to what? Lower band. And your close for that red candlestick should be above, right? If it's a red, it should be above. No matter it's a red or green, it should be above, right? So the last one is your RSI should be below 30. So then you can go long on the opening price of the next candlestick. So we're saying this candlestick, first it gives you one candlestick, it gives you a signal, right? So the first signal I said about the low, right? Then the close, your close should be above or equal to this. Your low should be equal or below. So how do you get in a position? You should wait on the opening of the new candlestick. So the new candlestick is this green, so it's opening here, right? So the moment it opens here, you can see it's opening here. The moment it opens, that's where you get in your position. So it's same as when you are going short. The moment you see this is a green candlestick, you see a higher. So I'll read. So it's same as the moment you see this higher high of this, the high of this green candlestick, it's above this upper band, right? So the band is, these are two standard deviation I didn't mention. These are two standard deviation. So if it's above, right, should be above or equal to this upper band, right? So it gives you the first signal. The second one is your close. Your close should be below the upper, like this. It shows that there is a signal for you to short. So do you need to get in position right now? No, you need to wait when the opening of the new candlestick. That's where you get in the position. That's what I'm saying. If it opens inside this, that's where you need to get. But if it opens here outside, please be careful. If the next candlestick opens here, you should wait, because otherwise you, and also you should also wait for RSI to say if it crosses, like I said, the 70. level, if it's above 70 level. So that's what I'm saying. So how do you exit your exit rows? So the exit rows are very simple, right? They are very simple here, your exit rows. So the first one, for when you're going long, we have what you call initial stop loss and the initial profit, take profit, and the full take profit and adjusted stop loss. So all of these I'll explain right now. So the first initial stop loss should be 50 pips below the signal candlestick low, right? So let's say you are here, you see this low, it's less or equal to this lower band, right? Which means there's a signal, right? So you know that you are getting a position on the opening of this green candlestick, right? So where is your stop loss? Your stop loss, you measure it from your signal. Be very careful, not from this green, the one that you are waiting for, the opening. No, you come back to this red, you measure 50 pips. You can do 40 pips, but I love 50 pips. 50 pips, you measure 50 pips, that's where your stop loss is, 50 pips away, right? The same as this one, you find your high is above this upper band, so you measure only, this is what we call a signal candlestick, that's what we call a signal candlestick. So you measure on a signal candlestick, you measure 50 pips above, you put your stop loss, because you are going short, not on this. So we have explained about our initial stop loss, your initial take profit, whether you're going long, your initial, let's say you get in a position in, so your initial take profit is here. When it crosses this middle band, that's where you close your position. So you can put an alert there, you can put an alert to say if it crosses this, I should close my initial. So should you close the whole position? No, you close the half of your position here, right? Knowing that your take profit is 50 pips away, you close your position, your half of 50% of your position here, 50%. So what about your stop loss? You adjust it back to this band. So that's what we are explaining here. So your initial, close the half of, you close the half, the position at the opening of the next candlestick after the first touch of, so it should first touch this, the first initial close, it should first touch, then you need to wait on the opening of the new candlestick. When it opens here, that's where you close your 50% position. So you close twice here on this strategy, So what about the full take profit? So close the rest of the position at the opening of the next candlestick after the touch of the opposite band. So you close the 50% here, then another 50% you close it, you wait up until this rides and hits the upper band. So the other 50% you close it when it hits this. So you adjust your stop loss, you trail stop loss on when you are now targeting the 50%. So you adjust it here. So why do we close first? You adjust your 50 pips, now your stop loss is adjusted to this band, lower band, your stop loss will be here. So why do we do this twice? So that you conserve it. It's a conservative method, very important to understand. So it's same thing when you're going short, you put your 50 pips here, you wait up until it touches here, when the opening, close the 50% of your position, the rest you close it when it hits this side. You adjust your stop loss when it comes here. It's just very simple, but I will illustrate with an example. Let's move to our next.